So have you got it? So what we have done, interest coverage
sir.
ratio, what we have excluded, Shrishti? Depreciation is not
So
to be counted.
depreciation
Then
will be
one more thing I
excluded in
said that
other
has to
income.
be excluded from the profit before tax. The
Other
exceptional
income.
income. What was the
Other
exceptional
income, sir.
income in case of
Yes, sir.
Reliance? That has to be
The
excluded for
selling of Asian
calculating the
Paint
interest
share.
coverage ratio, and we will get 5.37 exactly. Okay. Is that okay? Okay. So now we have what we have done. We have done
Yes,
a lot
sir.
of things. Interest coverage ratio. So the company has an interest coverage ratio of 5.37, which means that the company is earning 5 times more profit than what interest it is paying. Okay. So which means the company is very sound. Even if the profit goes down, it is not worried. It can still pay the interest because the profit is 5 times compared to the interest what it's paying. Okay. Now, if you check with any other company, for example, let's say Adani, which is all in heavy debt. So are they also having the same kind of a picture? So Adani Enterprises. So what is the Adani Enterprises interest coverage ratio? So is it better than Reliance, or
1.98.
Reliance is better than Adani? It is
Adani is better
earning,
than, sorry, Reliance
about
is better
five
than
times, and this
Adani.
is earning about 2 times only. Okay, fine. And let's say Hindustan Unilever, because it has almost no debt. So what is interest coverage ratio here? So in terms of financial
33.6.
stability and soundness, which is the best company out of the three? Because it doesn't have any debt. Of course,
Unilever.
it will be misnomer
Unilever.
because Hindustan Lever never requires huge amount of debt, whereas Reliance requires a very huge amount of debt, and it has to rely on that. But the interest coverage ratio will be very, very high in case of Hindustan Unilever. The companies which are zero debt, for example, let's say a company like Asian Paints, which is also a company which has a low debt. Okay, so interest coverage ratio of Asian Paint is how much? And what is the debt equity ratio of Asian Paints?
25.8.
So it has also a low debt, and it's a low debt
0.12.
company, and interest coverage ratio is also very high. Now, let's say, for example, Tata Motors. Okay. So what is Tata Motors? Let's see. How much is the interest coverage ratio? It's good. It's very good. Though
7.02.
the debt equity ratio is slightly higher compared to Reliance, so that means has more debt compared to Reliance, but the interest coverage ratio is very good compared to Reliance. Okay, so when you look at in terms of financial strength, Tata Motors, as per the numbers, what we read is a better financial company. In a financial healthy company than Reliance, simply because the interest coverage ratio is higher. If you go by that, now all the people who rate the companies. Okay, let's go back to Reliance. Now, every company has a rating. Okay, there's a lot of rating agencies like ICRA. So they rate. Okay, so let's go to and see. Okay, doc. So we go to the doc and look at rating, credit rating of the company. Okay, so the highest rating is called AAA rating. Okay, so Crystal has given a AAA rating to Reliance. Is that okay? Can you read that? So in India,
Yes, sir.
all the companies which are raising money by way of issuing bonds, they need to get themselves rated. And AAA rated is the highest rating. So any company, the rating agencies like Crystal, which is a rating agency itself, they rate the companies. So whenever the ratio, interest coverage ratio is above 5, they say the company is good. But whenever the ratio is low, the rating falls. Let's say, for example, let's go and see, but that's not all. Let's say Adani. Let's say what is the company Adani, which is having just a so Adani may not have rated themselves. Okay, they may have a short-term rating rather than a long-term rating. So their rating is basically only for short-term purposes, not for long-term. That's why they have commercial papers and they have not taken any loan recently. Okay. So the rating is not coming here. Of course, the rating is coming as A1 plus, okay, which is basically a short-term rating. So they don't have a long-term rating at the moment. Okay, because if they will get maybe single A or they may get a B rating. Okay, fine. So coming back to again, say Reliance. Okay, is this clear? Okay, so what
Yes,
else?
sir.
Now we talk about, should we have a small break for 5 minutes? Should we? Okay.